Okay, welcome to our Financial Wellness First series. It's sponsored by First Financial Federal Credit Union. We are so pleased that you can join us today. Today's topic is a popular one. It's all about credit scores and what you need to know. And it will be presented by our lending trainer who's joining us today, Allison McKenney. Thank you so much, Allison, for joining. I'm going to turn it over to you.
Hi, Andrea. Thanks for having me. I am thrilled to be here. Before I get started on credit scores, I'm just going to give you a little bit of background information about myself. Like Andrea said, I am the lending trainer. I have been training and teaching professionally for the last 15 years, from teaching dance classes in high school to teaching high school English classes. Showing people something new and helping them understand it has been a lifelong passion of mine. I started training in the financial industry 4 years ago and happily made First Financial my home in 2019. Some of the basics of what I'm going to be covering today, the basics. We're going to dig a little bit deeper about credit scores, get into some of the details, see what everyone knows. Talk about the advantages of having a high credit score, how you can improve it, tools available to you for improvement, and these are free, some things to keep in mind, and some common questions. So the basics. Who cares about credit scores? Credit scores affect all areas of your life, whether you're renting an apartment, applying for security clearances, have new employment, are applying for a phone, or need a loan for a house, car, or extra money. Your credit score affects all those areas. Next, Andrea. So what's the difference between your credit score and your credit report? Your credit score is a 3-digit number derived from all of the information on your credit report. So this number, calculated using a mathematical formula, indicates the likelihood of defaulting on a loan payment, which is defined as being more than 90 days past due. Next. So the credit report is credit-related information a credit reporting company has gathered from different sources. It lists your mortgage payments, your credit card balances, credit card payments, auto loan payments, and credit inquiries. It's like a snapshot of all of your credit history. So in summary, your credit score is calculated from the information listed on your credit report. And banks use credit scores, or financial institutions use credit scores to kind of determine what type of risk you are to lend to. So the higher your credit score, the less of a risk you are. And the more you're able to get things at lower interest rates and even just be able to, get that phone you want or the apartment you want. So going back to talking about credit scores, the companies that calculate credit scores use different formulas. So the number can be slightly higher or lower depending on what company your financial institution uses. VantageScore is the calculation used by the 3 leading credit reporting companies, Experian, Equifax, and TransUnion. Next. All right, so the credit score can range from 300 to 850. 300 is very poor score, 850 is excellent. As you can see on this graphic, 61% of Americans have fair VantageScore or better, which is a decent amount, but then in turn, that means 39% of Americans have poor or very poor credit scores. And again, it's a shame because credit scores, affect a lot of your decisions, what you're able to do financially. It's kind of weird, but credit scores have actually been an interest of mine most of my life. growing up, my family struggled a lot financially, and we had very poor credit. And so again and again, throughout my life, I kept hearing, no, we can't do this. No, we can't do that because of our credit scores. And so once I became independent, keeping my credit score high was a goal of mine, and it's possible. So even if you're listening and you're really struggling with your credit score, feel like it's never going to get high enough, I do want you to know that there are steps I'm going to share in this presentation that will help you improve your credit score, and it is possible to improve your credit. Okay, moving on. So credit score categories. There are about 5 categories that make up your credit score. The biggest one is your payment history. Do you pay your loans on time? This is very important. I can't recommend enough getting on automatic pay or automatic transfer with all of your loans, credit cards, bills, everything, because you just don't have to think about it and everything transfers automatically on time. Credit usage is 23%. This is the ratio between the total balance you owe and your total credit limit. Closing accounts can actually hurt your score because it shrinks your credit limit. Okay. Then the credit age is 21%. So the longer your credit history, the better. This category also looks at the age of your oldest and newest accounts and whether you have used an account recently. 11% is the mix of credit. How many total accounts do you have? What types of credit are they? And 5% recent credit. Opening multiple credit accounts in short periods of time could represent a greater risk for lenders. Okay. So again, I covered it briefly, but to go in a little more detail, credit reports can include any of the following: public records such as tax liens, record of mortgage payments, credit card balances, credit card limits and credit card payments, auto loan payments, credit inquiries, and total loan amounts. Okay. So it's very important your credit report is accurate. As I said before, your credit report is what makes up your credit score. It's very easy for things to be inaccurate on your credit report. By federal law, you're entitled to receive 1 free copy of your credit report from each credit reporting company every 12 months. So you can go to annualcreditreport.com or call that number and you'll receive a free credit report. So if you do, once you receive your credit report, if you do see information that is incorrect, it's really important that you dispute that with the company that recorded it or the company that you got the credit report from. And plus, it's just a good idea to keep an eye on your credit report because with all of the fraud that's out there, it's beneficial to keep an eye and know if anyone takes any credit cards or anything out in your name. Next. The advantages of higher credit scores. So I touched on this a little bit, but you know, there's a lot of advantages to higher credit scores. A credit score indicates the likelihood you would default on a loan. So financial institutions use this information when deciding whether to approve a loan or credit card for you. Once you are approved for an auto loan, personal loan, or mortgage, your credit score can determine the amount of interest you pay on a loan. The lower your credit score, the higher risk you are to lend to. So a financial institution may charge more interest. And in turn, the higher your credit score, the more likely you are to pay your loans on time. And since there is a minimal risk to the financial institution, you pay less interest on your loans. Next. Here's an example. I have 2 people here who took out a $5,000 personal loan. All right, our first person is Sally. She is planning a spectacular birthday party for her twins, and she has really good credit. It's greater than 700. She wants a 48-term loan. Her interest rate based on her credit is 9.65. So with a $5,000 personal loan and that interest rate, her monthly payment would be about 126. And then her total interest paid on the loan is about 1,050. So then we have Tom down below. Tom needs this $5,000 personal loan to make some repairs on his car. His credit isn't as good. So for him, this 48-month term loan, the interest rate is almost double. It's 18% on 5,000. So that makes his monthly payment 146, which isn't too much more. But then if you look at the total interest paid on the life of the loan, it's double. It's $2,000, almost $2,000, which is about $1,000 more than what Sally paid. So those with a credit score of 700 or better pay about 1,000 less over the life of the loan. So again, they're just saving money. More doors are open to them. You know, that's how important that credit score is. Okay. So how to increase your credit score? Like I said earlier, pay your bills on time. Late payments have the greatest impact on your credit score. Apply for credit only when you need it. Do not open too many accounts too frequently, and avoid opening multiple accounts within a short time span. You also want to keep your outstanding balances low. A good rule of thumb is keep your balances below 30% of the credit limit on any account. Ideally, you want to pay off your credit card balance every month because then you don't have interest payments. But if you can't do that, you want to keep it as low as possible. Note, you will not increase your credit score any faster by carrying a balance than you would be if you paid it off each month. So if you can pay it off each month, it always makes the most sense to pay off your balance. Okay. So some ways to improve your credit score: reduce your total debt. It's not necessarily bad to owe some money, but it's not good to owe too much money. Consider paying down some of your outstanding loans. And you also want to build up some credit history. You want to maintain a timely payment history for a mix of accounts over a longer period, and that can improve your score. Okay, go ahead. So now that we've covered what the credit score is, what the credit report is, and ways to improve your score, I'm going to also give you some tools that will assist with that. One great resource is on First Financial's website. If you go under resources, you'll see the Financial Wellness Center. We have financial education online courses. It's a Money Thing, Money Talks, and there's also Green Path Financial Counseling, which I'll talk about in a second. And if you are a member of First Financial and you have online or mobile banking, you also have access to Savvy Money's credit score, which is a very useful tool. Next. So Green Path Financial Counseling. You can see their website and phone number at the top of the slide. All of the counselors here are very compassionate, respectful, and they're credit certified. Green Path offers the following counseling services for free. There is financial and debt counseling, pre-credit report review, student loan counseling, mortgage delinquency counseling, and rental counseling. And then there are some services you can have for a fee. Green Path is great because if you're struggling or you want to increase your credit score and you just don't know how, or you're struggling to pay all your debt, you can call them and they'll do a soft credit pull of your credit report. And then they'll study that with you and give you some suggestions on maybe consolidating some loans, you know, what your options are to improve, your best options are to improve your credit score. They can also help with you setting up a budget. And again, they're very friendly, they're very thorough, and my favorite part about them is they even call back and follow up in like 3 to 6 months to see if you're following through on what you said you would do. So that's always a benefit. And their website in general contains tons of free webinars, budget worksheets, financial calculators, and short articles. Next. Savvy Money's credit score. Again, this is available if you're a member and you have online or mobile banking. Once you're registered on this site, you can, or this tool, this is actually incorporated into the online mobile banking. So you don't even have to leave First Financial's online banking for this. But anyways, once you're registered, you get a daily refreshed credit score, a credit report, a score analysis with grades for each credit score category that we covered earlier, a list of recommended actions to increase your score, a score simulator that shows how different credit activities can affect your score. For example, if you're thinking about getting a new car and you want to add an auto loan, you can plug that information in and you would see how it would affect your credit score. Also, if you're trying to decide which credit card to pay off first or pay down the balance first, you can, again, play with the different scenarios on this tool and it'll tell you kind of its effect on your credit score. The thing to remember with credit scores is they fluctuate often. You put an little extra money on your credit card balance, it might go down. And different financial institutions can use different credit reporting models. So don't think of them as written in cement, and the way they are now is the way they'll always be. They do fluctuate a lot throughout time. So like I said, there are a lot of tools available to improve it if you need to. Next. So again, there's the arrow showing you where you can register. Next. So this is the dashboard. On the left column, you see the different grades this person received based on their credit report. And every time Savvy Money pools your credit, it's a soft pool, so it doesn't affect your credit score. Like we saw earlier, sometimes inquiries can drop your credit score a little bit. But if it's a soft pool, it doesn't affect your credit score at all. So you get your grades, you can click refresh score to get a new credit score. You'll see how your rating is and how it compares to other people in your zip code. You can see the range of the scores here. 300, they consider deficient. 600 and up is fair, 660 is good, 780 to 850 is excellent. And then you'll also get some tailored offers from First Financial based on your credit information. Next. So here's an example of grade and actions you can take. This is the payment history category. Payment history is the biggest category that comprises your credit score. So this is a very important one. And this is basically paying your bills on time. So here you can say this person has been doing a great job paying everything. But if you weren't, or if you wanted to focus on improving the score even more, it gives you specific detailed actions that you can do. For example, if you have past due accounts, make them current. That's huge. That's the best thing you can do for your credit score. Use no more than 3 to 4 credit cards. It's easier to track fewer monthly payments. You want to put your installment loans on auto pay, like I suggested earlier. Nowadays, it's so easy to do, and it's such a great benefit. And then make sure you can afford your monthly payments. Talk to your lender before you default on your loans. They can help. Next. All right, now we go to the category credit usage. Here, this person received a C. Keep your credit usage below 30% on your credit cards in order to improve this grade. Yep, it's a very easy to rack up that balance, but you definitely want to try to keep it below 30% of your total limit. So your balance is the amount of money you have spent on your credit card, and the limit is the amount available to you to put on the credit card. So again, the actions are reduce spending, increase payments on your credit cards, don't close unused cards, pay off debt rather than moving it around, and don't open new cards, just increase your available credit. So this don't close unused cards. The reason they say that is, I'll give you an example. Say I have a $2,000 balance on 2 credit cards. Together, the total limit of those credit cards is $10,000. So I've spent $2,000, but I have an availability of $10,000 on these 2 credit cards. So my ratio of balance to limit is 2 to 10. Now say I close one of my cards and I wasn't using it, there's nothing on it. So now I still have that $2,000 balance, the amount of money I've spent on my credit card. And then, but now, because I closed one of them, my limit is only $5,000. So my ratio of balance to limit, the available amount I can spend, is 2 to 5. So that's not as big of a ratio difference. So that would affect my credit score. That's why we suggest closing your unused, not closing your unused cards. But another thing to also keep in mind is what type of spender you are. If you're the type of person that if you have a credit card, you have a balance on it, then it's probably best to close your credit card, unused credit cards, because you don't want to keep racking up debt. Okay, next. And then here you can, what I love is you can sign up for notifications. So if my credit score changes and I haven't done any action for that to happen, I always check to see what's going on with my credit report. And then if you want to dispute a credit report, you can just click that dispute button. Next. Savvy Money has tons of free resources. There are short blogs, thousands of them, easy reads, 1 to 2 minutes. They're up to date and relatable. For example, they have stuff about saving money for Christmas at the right time, COVID-related articles, ways to battle inflation. It's nice because they're really timely. And again, they're a very quick read, not much of a commitment. Okay, go ahead. Here are some examples of the blogs. Go ahead. So some things to keep in mind. You don't want to waste money on companies that'll fix your credit. You can do this yourself. Every 30, get those free credit reports we talked about. Reach out to GreenPath. Start looking at the financial articles available to you. Try to budget, sign up for automatic payments for your bills. And loans. There's a lot of free ways to fix your credit. So you don't want to have to pay a company to do that. You want to track and review your credit. And then another thing to keep in mind is when you're thinking about how your credit activity affects your credit score, the more trades, like the more credit activity you have, like mortgages, auto loans, multiple cards, the less impact and less severe your actions are. So the more you have going on, the more you can do, more activity you can have, and there's less impact. Whereas if you only have one card and not many loans, then the activity you do will more greatly impact your score. Okay, next. Some common questions. This first one we've already covered. Does closing a credit card improve your credit score? No. This is a good question. Does shopping around for loans hurt my credit score? In the past, it did, but it doesn't anymore. Most credit reporting companies use a 14-day rolling window in which all credit inquiries are considered one. This encourages consumers to shop for the best loan rates and conditions. If you have no credit history, will your score be 0? No. Basically, everyone's score starts around 600, and then it either moves up or down depending on your activity. Next. Any questions from the audience?
Feel free to put it in the chat if you would like, or you can unmute.
We don't have any in the chat right now, but there are some resources if you're on the call. Looks like you might be on a phone, not sure. You could definitely access those resources.
Yeah, we'll put the links in the chat. If you have any questions and you think of, you can reach out to me. My information, my contact information will be in the chat as well. So I just want to thank Allison for joining us today and providing the useful tips and great information about credit scores. Just a reminder to please visit our Financial Wellness Center page that Allison was referring to. There is a ton of information for you there to access, including other financial wellness topics. And we thank you so much, and we hope you have a great day.
Thank you.